Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin this morning's webinar, the Kiwi dollar has progressed lower overnight and records a low of 71.53. In light of the current pattern, I do anticipate the market will continue the decline with the objective still holding towards 71 figure 20. It is noted in the report, however, that lowering your stop loss to minimize any losses should now be placed around 72.22. Just in case we do get a surge to the upside, that you're locking in profit since the break of 72.75. Looking at the euro, well, as you can see, the view still holds from the report that 105.7085 still plays a key part to the downside. A break beneath this level would see further weakness and expose a target of 104.5570 to 103.4060, which is the recent near lows around December, or should I say the lows around the last near 14 years ago. The market now, as you can see, if you look at the hourly, you can draw a downtrend. And that downtrend now hits a point around 106.65. So there's two levels to the top side for the market to break. Is first of all this trend at 65, and then the next level, which is a firmer cap, seen at 107.0515. In light of the pattern, I do expect to see, as I mentioned, a break to the downside and expose those objectives. The Australian dollar price action overnight this time around is negative and actually struggling now towards that top side. And as you can see over the last 5 to 8 trading days, is the market is still falling towards that 77 handle. With the intraday resistance capping around 65, I expect to see further emphasis to the downside. Now a break beneath 75.90 would give further exposure to 75.30, with the objective holding at 74.8090 and reassess from there. Although there is one thing to note, is the fact that the stochastic and also the MACD haven't fully confirmed to the downside. However, a break of 75.90 should strengthen these signals and promote a further decline. Dollar yen, very mixed at the moment, with the market struggling to take out this 113.95 resistance, although we did get a high yesterday of 114.15, is the fact that the market clearly has to take out the resistance of 114.05 today. If we do get that break, then that should give further momentum up towards 114.65 to 115. If you look at the dailies, you can see the resistance comes in around 115.50-55. A very firm cap and has held very respectively. In the next 24 hours, if we could see a minor pullback from what the intraday tells me, but towards the support now seen at 113.35 as minor. The firmer support comes in now at 112.50, and I do expect to see demand to return from there. You can see here that the indicators are a little bit on the weaker side, so we could get this dip before the rally. Sterling still no change there. However, in the last 24 hours, but still expect weakness to return. You can see the MACD is fully in a negative mode here. Thus the stochastic should put further emphasis to the downside. What will get this move is a break beneath 123.80. That would expose the recent lows around 121 as an objective. Fresh advances in the next 24 hours should find a cap around 125.55 to 126.15. And to wrapping up with gold, the market's still struggling to hold to its gains. As you can see here, since the 46 rejection, rallied back to 38 and then fell away and now printing a low of 19. In light of the pattern, I still feel the market is negative and I expect to see a move to 12.21 as minor, with the next level at 12.15.16. Now a break beneath there will give further exposure down towards 06.08 and reassess from there. Resistance on the top side now, intraday, comes in at 12.32 and then slightly higher with a cap around 38. So that wraps up my daily video. Thank you very much for joining me, and as always, look out for the intraday report that shall be released shortly.